Toyota here in the U.S. because we're at the headquarters in Plano, Texas, where they're unveiling a slew of new vehicles that will go into production and on sale later this year, early next year, including the new RAV4. When you look at Toyota's footprint in the United States,
they've been lying to you. Your favorite tech giant isn't as ethical as you think. Innovation, privacy, and data security. These are the promises they made. But behind closed doors, they've been manipulating your information and compromising your security for years. This isn't just a breach, it's your digital life at stake. Why hasn't anyone blown the whistle on this sooner? What's the real cost of your personal data being sold? And how far does their reach go? By the end of this video, you'll understand. This isn't just about technology, it's about your privacy and the future of your data. The ambush: Toyota didn't just update an electric vehicle, they detonated a market shift. The redesigned BZ4X wasn't a quiet refresh. It was a bold, calculated strike aimed straight at Tesla's foundation. The pricing was aggressive, the design intentional, and the feature set shockingly complete. Suddenly, what was once considered a lagging EV program became the most talked about release of the year. Consumers who had ignored Toyota's early electric efforts were now watching closely. The BZ4X wasn't futuristic or quirky. It looked like a normal, dependable SUV. That familiarity was the bait, but it was what came next that triggered an industry-wide reaction. The BZ4X didn't just enter the market, it crashed through it. It wasn't just a new model, it was a loaded weapon. Beneath its sleek design hid a pricing strategy so aggressive, it didn't just threaten Tesla, it threatened the entire business model. It wasn't just a release, it was a declaration. For under half the price of a Tesla Model Y, Toyota delivered a full-size electric SUV that didn't feel like a compromise. Legacy automakers felt the pressure instantly. Tesla, they stayed quiet. But industry insiders knew this wasn't a temporary stunt. It was a global ambush, and it worked. Toyota didn't just enter the EV war, they redefined its rules. What looked like a pricing play was actually just the opening shot. Toyota had built something far more dangerous under the surface. If this opening already has you questioning what you thought you knew about Tesla, pause for a second, then hit that like button. It helps push this story to more people who need to see it. And I want to hear from you in the comments. Do you think Toyota just made their winning move, or is Tesla still in control? I'm watching the comments section and replying, so don't hold back. Now, let's get into what's actually powering this ambush. Under the hood, Toyota's engineering team didn't just tweak specs, they rewired expectations. The redesigned BZ4X now features a 73 kilowatt-hour battery pack and a dual motor setup pushing 338 horsepower. But raw power wasn't the goal. Toyota fine-tuned its system for intelligent efficiency, speed, and comfort, not drag strip drama. A new silicon carbide inverter reduces energy loss, helping boost range and acceleration while maintaining thermal balance. The BZ4X can now accelerate from 0 to 60 in just over 4 seconds, and for most drivers, that's more than enough. Toyota also introduced advanced battery preconditioning and a heat pump system, two things Tesla once used as selling points. The BZ4X now automatically warms its battery in cold weather to maintain optimal charging speeds. No more 30-minute winter wait times. This wasn't a gimmick, it was a direct shot at Tesla's technical edge. By solving real-world pain points, Toyota didn't just match performance expectations, it made them practical. Tech enthusiasts noticed, but so did average buyers who just wanted convenience that worked. This wasn't flashy innovation, it was quiet precision. Toyota didn't promise the moon. They perfected the fundamentals, and in an industry obsessed with breakthroughs, that made the BZ4X feel dangerously real. Tesla once owned the engineering narrative. Now, they were sharing it. Behind every kilowatt was a decision that would redefine the economics of the entire EV industry. The battery as a weapon. The real breakthrough wasn't speed or screens, it was strategy. Toyota's decision to switch to lithium iron phosphate cells wasn't about innovation, it was about domination. LFP batteries are cheaper, safer, and longer lasting. They offer lower energy density, but for most daily drivers, that trade-off is irrelevant. By choosing affordability over range extremism, Toyota changed the entire pricing equation. These cells allow the BZ4X to offer over 300 miles of range at a cost unthinkable for traditional lithium-ion packs. While Tesla fought to keep cobalt and nickel in the mix, Toyota skipped past them and skipped the price too. But Toyota didn't stop there. They also teased a solid-state battery roadmap, a pipeline with promises of 700 miles of range and 10-minute top-ups. This tech isn't ready yet, but its mere existence puts Toyota miles ahead in the EV arms race. They knew the real war wasn't about power, it was about price. Every dollar saved on battery chemistry was a bullet in the fight for global dominance, and Toyota came fully armed. The brilliance lies in timing. Toyota chose chemistry that scales now while investing in future breakthroughs that will detonate later. It's not just batteries. batteries, its battle strategy. Tesla built batteries to wow Wall Street. Toyota built them to wipe out the middle tier. Still, no battery breakthrough matters if you can't flood the market, and that's where Toyota's next weapon emerged. The production machine. Tesla has gigafactories. Toyota has the world. With decades of manufacturing dominance and a perfected lean production system, Toyota isn't ramping up, it's already scaled. Their factories in Kentucky, Japan, and soon the United Kingdom are not pilot projects. They are juggernauts. Every bolt, every weld, every second on Toyota's EV lines has been streamlined for volume. Where Tesla must build, Toyota just activates. This isn't theory. It's decades of supply chain supremacy turned toward electric vehicles. Toyota's joint venture with Chinese battery giant CATL, plus strategic partnerships with BYD and Guangqi, give it vertically integrated access to cheap cells and components. It doesn't just build EVs, it builds them with less friction, less cost, and fewer delays. Tesla's vertical integration was once an advantage. Now it's a bottleneck. With Toyota leveraging global supplier networks and regional trade routes, they can produce and ship at volumes Tesla can't touch without breaking margin. Their factories don't just build cars, they orchestrate them. Decades of Kaizen refinement turned Toyota's plants into pressure-tested ecosystems. Every screw, every shipment, optimized to crush costs without compromising quality. This is not the start of Toyota's EV journey. It's the midpoint. And the BZ4X is just the opening shot in a far larger campaign. Because now that the machines are running, the pressure is shifting, and Tesla is in the crosshairs. The margin meltdown. Tesla didn't become an industry leader by selling cheap cars. Its dominance came from one thing: massive margins. For every electric vehicle it sold, Tesla pulled in thousands more in profit than legacy rivals. That margin fueled innovation, expansion, and investor confidence. But Toyota just put that model under existential threat. Toyota's BZ4X doesn't just undercut Tesla's Model Y, it obliterates its pricing cushion. By leveraging lithium iron phosphate batteries, joint manufacturing in China, and decades of lean production expertise, Toyota can sell at prices Tesla can't match without bleeding cash. Tesla's vertically integrated structure, once praised for efficiency, has now become a financial liability. Its supply chain is tightly controlled, but also expensive, rigid, and heavily exposed to raw material price swings. That worked when Tesla had no competition. Now, it's a trap. Toyota's ability to take short-term losses for long-term dominance makes this a margin war Tesla was never built to fight. The BZ4X isn't just a car, it's a cost bomb. Wall Street watched with growing unease. Tesla's strength was its margin, not its scale. When Toyota slashed prices, it didn't just undercut a car, it undercut the very logic of Tesla's valuation. Tesla investors once celebrated high margins as proof of superiority. Now, those same margins threaten to collapse under pressure from a rival with more factories, deeper pockets, and a far lower break-even point. As margins cracked, Tesla's other crown jewel, its once exclusive infrastructure, began slipping through its fingers. The charging surrender. For years, Tesla's supercharger network was its ultimate trump card. Fast, reliable, and exclusive. It gave Tesla drivers something no other EV owner had, but that wall just crumbled. Toyota's adoption of the North American Charging Standard, or NACS, means its future EVs will plug into the very network Tesla once used to lock competitors out. But there's a twist. Tesla had to open those chargers to competitors to access billions in federal infrastructure funds. Now, Toyota customers will gain access to Tesla's most valuable asset without buying a Tesla. That's not just irony, that's strategic defeat. But Toyota went further. With plug-and-charge integration, its vehicles will communicate directly with the charger. No apps, no cards, no confusion. Just plug in and power up. This is no longer Tesla's advantage. It's now an industry standard. As NACS becomes the common port and third-party networks continue expanding, Tesla's once loyal supercharger ecosystem starts to feel like a toll road everyone can now drive for free. For Tesla, the loss of exclusivity hits hard. It removes a key incentive that drove brand loyalty and customer retention, and it opens the door for millions to leave Tesla behind. Beyond the plug, there was another battlefield where consumers demanded more, and Toyota was already there. Dealership domination. Tesla broke the rules when it bypassed traditional dealerships. Online ordering, direct-to-consumer sales, and sleek delivery centers made the process feel futuristic. But Toyota never played that game. And now, it's using that old-school structure to crush Tesla's customer experience advantage. Toyota's global network of over 10,000 dealerships is a service juggernaut. These aren't just sales floors. They're repair shops, parts hubs, recall centers, and real human support. When your car breaks, you know where to go. Tesla owners don't have that luxury. Wait times, mobile service constraints, and regional gaps in coverage continue to frustrate buyers. In some areas, getting a Tesla serviced quickly is nearly impossible. But Toyota customers have decades of trust in their local dealers. And now, with the BZ4X on showroom floors, those buyers can get hands-on experience, test drives, and same-day delivery, something Tesla's made-to-order system struggles models to match at scale. As EVs become mainstream, so do the expectations for support, convenience, and real-world accessibility. Toyota has infrastructure Tesla simply can't replicate in time. The direct sales revolution was bold, but in this moment, the traditional network wins. As customers flooded showrooms and service bays, the very meaning of premium began to turn on Tesla. Brand burnout. Tesla's brand once stood for the future. Buying a Model S or Model Y wasn't just about transportation. It was a status symbol, a membership card for early adopters and tech believers. But as electric vehicles become mainstream, that exclusivity is becoming a burden. Toyota's message is clear. EVs aren't just for the wealthy or the visionary, they're for everyone. With the BZ4X, Toyota flipped the script. It's practical, affordable, and familiar. That accessibility speaks louder than software updates or Easter eggs. It says, this is normal now. And that's exactly what mass market buyers want. Tesla's minimalist cabins, yoke steering wheels, and constant beta updates appeal to enthusiasts, but they alienate drivers who just want reliability, comfort, and simplicity. Toyota doesn't ask buyers to learn a new language. It just gives them what they already trust. And now that charging, performance, and price parity are closing in, Tesla's cool factor is losing heat. The brand once seen as futuristic now risks being seen as niche, an expensive novelty while the rest of the world moves on. Tesla didn't just lose a tech race, it's losing the narrative. But this story isn't about image anymore, it's about survival. And the rest of the world is joining Toyota's fight. BYD's blitz. Tesla was already struggling to fend off Toyota's surprise ambush. Then another heavyweight stormed the ring. Build your dreams. BYD didn't just enter the global stage, it detonated across it. The Chinese electric vehicle titan has already overtaken Tesla in total EV volume. But it is not just the numbers, it is the strategy. BYD dominates where Tesla cannot. Mass market affordability. Its LFP battery supply chain is vertically integrated. Its price points are aggressive, and its models range from compact city cars to full-sized sedans that appeal across demographics. What makes BYD especially dangerous is that it is playing the same game Toyota just entered: scale, cost, and reach, but with one massive advantage: home field control of the world's largest EV market. BYD is swallowing China and pushing into Europe, Southeast Asia, and Latin America with speed Tesla cannot match. Tesla's reliance on premium pricing puts it in an impossible triangle. Compete with BYD and lose profits. Compete with Toyota and lose the middle class. Stay premium and lose relevance. BYD's blitz wasn't just another competitor. It became the second blade in a pincer attack. With Toyota from one side and BYD from the other, Tesla's flank is exposed. Just as BYD tightened the noose, a wave of panic rippled through Europe's boardrooms and factory floors. Europe in panic mode. Volkswagen didn't expect this. Neither did Ford. For years, European and American automakers had built their electric vehicle strategies around gradual adoption. Premium sedans first, then trickle down to economy models. Toyota just shattered that timeline. The BZ4X, priced shockingly low, exposed a brutal truth. Legacy automakers were years behind on affordability. Volkswagen's ID series, once hailed as budget-friendly, now looks overpriced and underwhelming. Ford's Mustang Mach-E, aimed at the mid-tier market, is caught between premium ambition and Toyota's reality check. European policymakers are panicking. Germany and France have poured billions into EV incentives, assuming high prices would persist. That logic no longer holds. Toyota's strategy created a ripple effect. Suddenly, every automaker needed to justify its price tags. Consumers aren't willing to wait for affordability. They expect it now. That demand is bleeding into government halls, pushing European brands to scramble for emergency pricing adjustments and accelerated LFP partnerships. The crisis has exposed an uncomfortable fact. No Western automaker currently has Toyota's scale, nor BYD's domestic leverage, and the race to catch up is constrained by inflation, raw material shortages, and regulatory friction. This isn't just a pricing war, it's a full-blown identity crisis for legacy brands. With legacy brands scrambling, policymakers realized their own roadmaps were suddenly obsolete. The government rewrites the map. When Toyota dropped the price floor, it did more than disrupt competitors. It detonated the entire policy landscape. Governments across the world had spent years designing tax credits, subsidies, and tariffs based on the assumption that electric vehicles would stay expensive. Now, that foundation is gone. In the United States, the Inflation Reduction Act tied EV tax credits to domestic battery sourcing and final assembly. But Toyota's BZ4X, partially built abroad, challenges those rules by offering massive consumer appeal without needing those credits to compete. Meanwhile, the European Union faces a similar dilemma. Subsidies once needed to close the affordability gap are now at risk of inflating prices instead of solving them. That forces regulators to rethink everything, from how they support domestic automakers to how they defend against foreign electric vehicle floods. Trade frameworks are also under strain. Tesla benefits from relatively free access to European and Chinese markets, but Toyota and BYD's aggressive pricing might reignite calls for protectionism, export controls, and EV-specific trade zones. Policymakers are no longer steering a slow-moving EV transition. They're sprinting to catch a runaway train. But while governments were rewriting the rules, another fault line cracked wide open, this time inside the factories themselves. Yet even as lawmakers scrambled to respond, unrest was bubbling up somewhere they hadn't expected. Inside the factories themselves. The labor flashpoint. It started as murmurs, then came the walkouts. For workers across America, Europe, and beyond, Toyota's disruptive pricing triggered something bigger than a market shift. It reopened an old wound about the future of labor. Toyota's BZ4X model is not just affordable, it is creating jobs. New factories in North Carolina and expanded facilities in Japan and Southeast Asia are being staffed with human workers. Maintenance crews, line technicians, parts suppliers. Toyota's hybrid model blends automation with employment. Contrast that with Tesla. Elon Musk's factories are marvels of automation, gigapresses, robot arms, AI-directed logistics. But for the human workforce, that means fewer roles, tighter oversight, and a growing fear. Are we still needed? Labor unions are sounding the alarm. They point to Toyota's union-neutral growth and Tesla's long-standing opposition to organized labor. But the debate has shifted from contracts to survival. If affordable EVs can be built with human hands and sold profitably, why should workers accept automation that sidelines them? The implications are explosive. Toyota's rise could fuel a worker-driven backlash against fully automated facilities, and it may become the rallying cry of a new labor movement fighting not just for pay, but for presence. Because while Tesla battles cost and scale, Toyota is winning something harder to replicate: people. Consumer revolt. For decades, consumers accepted a difficult choice: pay a premium for electric innovation or settle for cheaper, gas-powered compromise. Toyota has now shattered that equation, and buyers are revolting. The reaction was immediate. Families that once dreamed of affording a Tesla now found a reality check in the BZ4X. With its approachable price, dependable brand name, and SUV utility, it didn't just compete, it replaced the shortlist. Thousands of consumers who had waited on the sidelines for electric prices to drop finally let in. Gasoline suddenly felt like a liability. Maintenance costs, rising fuel prices, and outdated resale value hit differently. Once a sleek, connected Toyota EV became the logical first choice. Even Tesla fans started to ask, what are we paying extra for? This revolt wasn't led by tech enthusiasts or climate activists. It was middle-income families, commuters, working-class professionals, people for whom affordability matters more than acceleration. Toyota made electric accessible, and that reset the entire consumer psychology. What once felt futuristic now feels expected, and gas-powered vehicles, once king, are starting to rot on dealer lots. As car keys changed hands across neighborhoods, the real shock was unfolding silently on trading floors around the world. Wall Street's verdict: for years, Tesla traded like a tech stock. High margin, high growth, high expectations. But the arrival of Toyota's affordable electric vehicle redefined the math, and Wall Street noticed. Investors began to shift as reports of Toyota's manufacturing scale and BYD's ballooning sales trickled in. Analysts downgraded Tesla's price targets. Margins, once untouchable, became a vulnerability. Toyota's stock, once seen as safe and slow, surged on volume expectations and emerging market penetration. BYD's valuation grew with its global expansion and vertical battery integration. Suddenly, the two companies Musk once mocked were now leading in unit economics. Tesla, in contrast, had no easy answer. Price cuts dented profits. Delays in a mass market model strained credibility. Shareholders who had once cheered every bold promise began demanding operational discipline instead. The verdict wasn't total collapse, but it was sobering. Market confidence in Tesla remained, but it was no longer absolute. Meanwhile, capital began flowing into supply chains supporting LFP batteries, regional EV assembly plants, and third-party charging networks, signaling a broader industry pivot. The markets weren't abandoning Tesla, but they were diversifying their bets. While markets adjusted to the new leaders of mobility, global power brokers realized they were caught flat-footed in a much bigger game. Geopolitics redrawn. Electric vehicles used to be a technological race. Now, they are a tool of national power. Toyota's announcement didn't just ripple through industries, it redrew alliances. Japan and China, historically wary of deep industrial ties, found unexpected synergy through Toyota's collaboration with Chinese manufacturers. Cost, scale, and production strategy aligned, accelerating EV growth while bypassing Western supply chain friction. Meanwhile, the European Union scrambled. With Volkswagen and Renault under pressure, the EU began discussing stronger subsidies, tariff protections, and partnerships to avoid becoming an EV import market. The bloc's energy goals were suddenly intertwined with manufacturing manufacturing sovereignty. In the United States, pressure mounted to defend domestic industry. The federal government expanded Inflation Reduction Act provisions, imposed targeted tariffs, and accelerated funding for battery plants and rare earth processing. National EV champions were promoted, but even that wasn't enough to offset Toyota's early mover advantage. This wasn't just industrial policy, it was international positioning. Nations now saw EV leadership as a gateway to trade control, employment stability, and climate leverage. Toyota didn't mean to launch a global contest, but their affordability bomb started one. Amid tariff battles and reshuffled alliances, the company that once rewrote the rules now faced a question of reinvention or irrelevance. If you've made it this far, you already know. This is bigger than Toyota versus Tesla. This is about who controls the future. So if you want to stay ahead of the next shockwave before the headlines even break, hit subscribe right now. I break down moves the media misses, and you'll want to be first to know what's coming next. This isn't just one video. It's a front row seat to an industry war. Tap subscribe and don't get left behind. Tesla's final decision: Tesla is not defeated, but it is cornered. Toyota, BYD, and geopolitical urgency have backed Elon Musk into the toughest strategic crossroads the company has ever faced. Path 1 is to stay premium. Lean into full self-driving, energy integration, and next-gen hardware. Make Tesla a luxury brand, not a mass-market one. This preserves margins but forfeits volume. Path 2 is to go down market. Accelerate the budget Tesla. Build the $25,000 model, compromise on features, and enter the price war. But that means rebuilding the supply chain, altering brand perception, and potentially burning through billions. Path 3 is transformation. Shift Tesla's focus entirely, from carmaker to platform. Emphasize AI, autonomous services, software licensing, and grid solutions. Let others win the volume race while Tesla becomes the Intel inside of mobility. Each path carries risk, and none can be pursued halfway. Inside Tesla's boardroom, these choices are no longer theoretical. They are urgent, because with each week, Toyota sells more BZ4Xs, BYD opens new markets, and consumers reset their expectations. Tesla doesn't need a new car. It needs a new identity. The next move must not just defend the company, it must redefine it, because the war is not about electric vehicles anymore. It is about who shapes the future and who just watches it pass by. If this shook your view of the EV world, then don't just scroll away. Hit that subscribe button. We're diving deeper into the power plays, reshaping everything from your driveway to Wall Street. Toyota's ambush isn't a fluke. It's the first cannon shot in a full-scale industrial war. And trust me, what comes next? You won't want to miss it. Drop a comment with your take. Is Tesla still king, or is this the changing of the guard? Either way, you're going to want front row access to the fallout. Subscribe now and stay ahead while the rest play catch-up.